All right, everyone, let's take a look at my Bitcoin Elliott Wave analysis. And today we're going to be assessing in this video if the lows on 60K are in or if we're going to have another sweep of those lows and the few things to be looking for in terms of taking maximum opportunity setups. So when we kind of look at the daily here, we have a 1, 2, 3, 4, 5 wave structure. And for the A to B wave, we should see a 3-wave structure, which will be some sort of A, B, C. And then we will be seeing some sort of 1, 2, 3, 4, 5 if this count proves true, which is if this is a overall 5, 3, 5 structure. And that would be the 4th wave to the 5th wave. So I do believe that new all-time highs will come, but I do think that there's going to be a lot of time in between that. But before we kind of get into forecasting, right, let's go down to the 1 hour here and look at the 60K low. So from the height of our 4 wave, at 97K, we had a very impulsive move down, which fits the 5th wave category for the wave A, which would be the 5th wave of the A, right? But we have to start to look at the wave structure within this. Internally, we have a 1, 2. Now, the tricky question is what we have going on here. So we can assume that one scenario is that this is a 3 wave into a 4 into a 5, and that's the 5th wave of the A. So that's something to keep in mind, and what we could be looking for is if we start to actually have that sort of confirmation, one thing that we're going to be looking at is the golden pocket, right? So before we get into if this is a 5th wave finale, terminal leg, let's look at the scenario that it's not. And let's say the low is not in and we have 60K that's going to be swept. Now we can assume that this leg here is a 3 wave, and the 4th wave was either put in here or a larger one is forming. So the way we can try to start to calculate that is do a Fibonacci pull from the height of 2 down to 3. Now you can see here that we did reject hard at the 382 and started to form weakness further into the charts. So from a 4 wave, from the 4th wave category, the 382 is a very attractive place that the 4th wave likes to go to. So from there, one could assume that that is a 4th wave, and now we are putting in a 5th wave, and we're going to kind of do a nice and slow 5th wave, 1, 2, 3, 4, 5 wave structure down into the lows, and that's something to be looking for. Now, the other scenario is if we have a larger WXYZ or ABC WXY structure, and we come up into the 0.5, then we have a 1, 2, 3, 4, 5 structure to sweep those 60K lows. So scenario 1, right, is this is a 4th wave and we're putting in the 5th wave now. Scenario 2 is the 4th wave comes up into the 0.5 and we bounce somewhere in here for the Z wave down to a 5th, and then that would be the overall terminal low, so the 5th of the A of the overall 5th wave, right? So two scenarios to look at. Now, let's go dive into if the other scenario that I was looking at, the 3rd and finale one. So if this is a finale terminal wave 5 of the A, let's look at what we have on a smaller scale here. Now, let's do a Fibonacci pull, golden pocket, and look for where we're at right now, really close to that golden pocket. Now, one could assume that this could be a 1, 2, 3, 4, 5 wave structure. So that would be a 1, and then we'd have a WXYXZ that we're putting in, or a wave 2, right? So overall, what you want to be looking for in that scenario is, wrong counts here, let me pull this up for you here, is if we are getting, so it looks like I deleted that count. So if we, let's do this here. So if I have a 1, 2, 3, 4, 5, right? So 1, 2, 3, 4, 5. We could start to be putting in some sort of structure like that. So in terms of the overall 618, the wave 2s like to come in down here. So again, wave 1, wave 2, wave 3, wave 4, and 5. So that's a motive wave sequence. Again, that's the assumption that the low is in, and we're not going to be taking that low out, and we're going to be forming the B wave. So this would be the A to the B wave structure within the B wave. And I know that sounds complex, but we can kind of walk through that here soon. But overall, this could be a wave 1 motive down, followed by, and this is definitely, you know, categorized as corrective structure. So that could be a wave 2, just a more complex WXYXZ. Multiple triple threes, those happen a lot on Bitcoin. Bitcoin loves to do fake outs like that, right? And what we've seen right here is just overlapping structure here. Nothing fancy, nothing fun to trade. It's been brutal. If anyone is trying to trade it, hopefully you're scalping and you're making good profits on that and not getting caught up in this chop. So you have a, you know, obviously a high up here, but then you come down, you do a lower low, lower high, lower low, lower high, lower low, lower high, lower low, you know, and so on and so on. So overall, we are seeing we are seeing bearish momentum. We are seeing weakness in the charts. Overall, it's not very impulsive. So that makes me believe that, one, the scenario of it being a larger wave 4 is still on the table, right? And we will see some sort of corrective move, bounce, hopefully in the golden pocket, right? So two long setups that I really want to talk through today that really cake into this Elliott Wave analysis and why I'm doing this video, because I do think from my Elliott Wave perspective, there is massive opportunity to be had right around this level. So from a maximum opportunity, let's look at the scenario that we have a Gartley right here, right? So again, we had an X wave down impulsive into the 618, which is pulled from the X wave down to the A wave. So you have a 618 backtest rejection, and then now we are followed into a C wave, golden wave, or golden pocket area that we're looking for, right? Now this is just a Fibonacci time pull, so it's pulled from the height of the X wave down to the A wave, and so you can kind of get a 1-to-1, and you can see that from the B wave we completed near that 1 Fibonacci level, and then the 1618 we have price coming in really well at the 1618 Fib time zone, so it kind of gives you that extra confluence factor that this move is happening on time and scheduled within the symmetry of this, right? So the one thing that I want to look at in this Gartley is the lack of confluence that we have, right? So I've been kind of talking about that since this low here at 60K. There's not a lot to trade within here because we had this massive squeeze up and we didn't spend any time really building any confluence here. So when we look at levels, we had an NPOC here. And you know, an NPOC yesterday, I personally said I'm not going to take it. I'm happy to miss this. I did miss this move up here, but all at the same, it's, you know, we came back down, we swept, so that trade would have been stopped out. And really what I'm looking for is that big long swing, whether to play the WXY or the wave 1, 2, and then the capture on the wave 3. Wave 3 is where you make most of that money from an Elliott Wave perspective, right? Wave 3s are the really attractive, the very impulsive. You don't want to be shorting a wave 3. Now, where does that leave us? So if we do the golden pocket pull here, we're almost down to that level. What else do we have down here that we can work with, right? So we've tapped the MPOC. We do have a daily sitting at the 62,773. The monthly volume profile. So if we go and look at the monthly open was up here. This is just the monthly open fixed range volume profile. We can see that the value area low is down at the daily, the monthly. And you know, you can look at this more of a zone if you're kind of scaling into it. That's pretty large zones here, right? So you have a 2 to 3% zone. So you could try to be very patient with this trade and say, okay, price is going to come down in and through the golden pocket to the 7.2 and tap this daily. And you could try to structure your trade where you have something about a 4 to 5%, you know, stop loss zone, and then target obviously, you know, higher, at least above this high up here, right? And that would be either your Gartley or the start of a much larger wave 3. Now, in terms of the lack of confluence, I do think you're going to have to be surgical and looking at order flow. We can get into that in a minute. But the other thing you can tack on to this is, let's get these levels out of here. Let's look at the daily open, right? So the daily open and the daily volume profile, we are now below the value area low. POC is way up here. Now let's look at the weekly volume profile. Weekly opens up here. We've kind of trended down again, lower low, lower high, lower low, lower high. Structure is bearish. We don't have any strength in these moves, and it's overlapping, it's choppy, and it's not fun to trade, right? Now we actually are sitting at the value area low, so you could start to look at some sort of long within here. Me personally, I am going to be waiting for that Fibonacci 618. And in terms of confluence with the weekly volume profile, you know, you could see something like this, right? Come into here and then reclaim this level here, and then you could take your long right there. And then that would be actually a smarter play to be patient, put your stop loss around here, and then target closer to these highs, right? So that's one of two ways you can play it, or two of two ways. Now, my personal preference overall is that we're going to be taking out the low one way or another. And that's the tricky part, because if you want to play the higher low setup that I just showed you, you know, you're going to have to get comfortable with assuming that you know, you have the possibility that price comes down and it goes lower. And you just have to take that risk. Now, if price does come and sweeps this low, or the levels down here, there's actually some attractive levels that I would be, in terms of maximum financial opportunity, These are definitely the levels that I would be looking to long here. You have a monthly naked point of control, a daily, a weekly naked point of control, an NPOC, a weekly, a daily, and a daily naked point of control. So you have a lot of confluence down here to work with. So if price does kind of come down into here, right, this would be a very attractive place to be looking for a sizable long setup. Now, that doesn't mean I'm going to be blindly longing into that zone, but I do have high confidence in this area. And that would be, you know, obviously maximum financial opportunity. And I would be sizing with more than just 2 to 4% risk. Now, with that being said, let's take a look at order flow, because I do want to show you guys what to kind of be looking for and what we're looking at on the charts right now. So in a 4-hour order flow time perspective, we had a nice little lower low yesterday, and then throughout New York session and through today's daily open, we just kind of had this slow grind up. But on volume, we had a trending, it was going lower, but price was going higher. Not something I really want to play with. I don't like any of that confluence in there. So I didn't take a long yesterday, and that saved me, because if we look at the MPOC was sitting about right here yesterday, we tapped that, rose up. So if we did take that long, you know, that's cool. Maybe we would have taken a small trim, paid ourselves, but ultimately that long would have been stopped out. And if you look, I mean, we had a negative 30 million in negative delta on the move down today in that 4-hour candle, and that's massive. I mean, that's bears are still in control. They're showing you who's boss right now. And again, you know, if I was looking at the, I was looking at the mini range, which is kind of sitting right here, which is where this previous day POC really is. I was looking for a long of that breakdown of the mini range low, come back up, reclaim, and then take that long and place stops below the, you know, the current low. And if we had done that, you know, I really wouldn't have paid out at all, and I would have gotten stopped out. So I avoided 2 long setups that would have gotten stopped out in theory. So the reason why I really like being patient, especially in chop like this, is you know, one, I didn't take 2 emotional trades, I didn't force them. So now the 2 trades that I walked through today, you know, whether it's the golden pocket trade or the low sweep, you know, if you even take both of those setups and both of them fail, well, then you have a very clear setup that you executed, and it wasn't 4 emotional trades that you lost. It was only 2, right? So that's the benefits of being patient through chop like this. And I'll still take that as a win, because I'm just following kind of my plan and being more patient and being surgical, if you will, right? So again, when we look at order flow, I really want to show you something like this. So this is the 4-hour. And if you look at this candle here, I don't know why it's doing this. If you look at this candle here up here, right, you can see a lot of, on the side there, 4 million, 4 million, 1 million. I mean, there's a lot of longs trapped up on those candles. And then we had a very negative 30 million high delta candle with heavy shorts piling in, and current prices just right below those shorts, right? So if we have some sort of move that we come down into that golden pocket and we get a very quick reversion back up, those shorts are going to be in trouble, especially if we see a lot of negative delta from a move down into that golden pocket with a quick reversion. So you have, let's say, a negative 30 million in delta sitting at that golden pocket. You know, that's a very interesting play, because you get that quick move back up, and all of a sudden shorts are in trouble, and you know you have a very interesting long setup there that could be favorable. So again, if you have that golden pocket play that I was just showing you on order flow, right? So golden pocket right here. If you have something that comes in here like this, and then you see a lot of shorts opening up into this and a quick reversion, and we reclaim that weekly value area, that's a sign of strength, high volume move. That would be a pretty interesting play to take, and I would probably take that play, right? So I'd go look at the weekly profile. We get that move into the golden pocket. We see a lot of shorts piling in at the lows, and then a quick reversion. Yeah, I'm going to be structuring my stop loss below the low and trying to attempt a long swing right there. Those are some of the things where when I talk about reactionary trades, those are the items to be looking for, and I think that's when order flow comes in at a very, very nice confluence set. When you have lack of confluence here, you can use order flow to an advantage. It's not always a one-to-one, but it really helps guide you and show you, especially down here. I mean, that's what we saw down here. A quick move down here, a lot of negative delta, quick bounce up, and then we saw a squeeze. So kind of the same thing. That's what you're looking at. And even here, when I show you on order flow, there's a lot of longs that got trapped up there. Everybody was longing, and then we had a quick long squeeze back down. So again, those are the trade setups that I'm looking for, the scenarios to look at, how I'm looking at and approaching that. And again, my goal is to just hop on these videos and educate you guys, walk through how I'm looking at this. If you're interested in taking these setups, I mean, this is just me following my plan, structuring how I create these plans, how I'm looking at these setups, and then overall just trying to guide and lead through this this chop. So I hope you guys enjoyed, and happy trading. Cheers.